All right, everybody, good afternoon. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. Hope everybody's doing well. Just want to do a quick sound check just to make sure you guys can hear me okay. You could see my screen, and then we will continue. I want to thank everybody joining us via GoToWebinar and YouTube as well. Good, Michael, thank you. Michael John says coming through great. Yes, John says awesome. So packed house here today. Thank you guys for taking some time out of your day. Again, my name is Jerry D'Ambrosio. I'm the manager of educational content with VectorVest. Been with VectorVest now 17 years. It'll be 17 years next month. And when I first started, I was in the product support department. Most everybody who first starts with VectorVest starts there in the product support department. And the education department back then really only consisted of one or two people. That's it. Steve Chappell, the gentleman to the left of me, really headed up the education team back then, and it wasn't many of folks in the education team. We've obviously grown over the years, right? And now, back then our education focused solely, or not solely, primarily on the VectorVest program. The VectorVest system of market analysis, stock analysis, how to build watch lists, Unisearch, all the tools in the program. We really focused on that. Over the years, we now teach you how to trade options. We teach you retirement strategies. And then we also teach a lot of different swing trading strategies and a lot of technical analysis. So we have you all covered. If you guys are managing those different types of portfolios, we hope you are. If you trade options, you got an options portfolio, right? All option trades. I don't know if you're mixing option trades and underlying stock investments in the same portfolio. You're managing different portfolios. The management of each portfolio is different, right? You're not going to manage a swing trade the same way you would a retirement stock. So why put them in the same portfolio? So you're breaking up and allocating capital towards different investment styles, and that's fine. That's great. So we hope you're doing that. And again, we have you covered no matter what type of portfolio you're managing. Okay, so here's what you're going to learn today. You're going to learn the difference between fundamental investors and technical traders, really the fundamental disagreement of what moves stock prices. And we'll talk about that. We have to talk about that first because then what we'll discuss is how we merge the two, how VectorVest merges fundamental valuation and technical analysis. No matter if you're an investor or trader, you're probably thinking, well, if I'm an investor, why would I need technical analysis? You'll see how we merge the two in a moment. And then finally, how to quickly and easily identify the best trades. That's always the key. If you understand a technique, if you understand a system, you have to go out and find candidates. There's a lot of different ways to do it, and I'll show you that here later. If you stick with me to the end, we'll be together for about an hour, so maybe about 12:45 or so, 12:50. Say, hey, Jerry, don't forget the slides. What I'll do is I'll give you guys the slides that I'm using today. There are a number of slides. Usually I do spend some time in the program, which I will do, but I do have a lot of slides here, and I'd like to give them to you. Just stick with me to the end, and I'll put them in the handout section of your GoToMeeting control panel. Okay, somebody remind me at the end. I do sometimes forget. So there are two different camps of investors. There's the fundamental analyst, and a fundamental analyst evaluates stocks to determine their intrinsic value. A fundamental analyst, a longer-term investor, really wants to know what the true value of the company is. That helps determine whether they're getting a bargain or are they paying a premium. So understanding intrinsic value is really the main goal of a fundamental analyst. They'll study a lot of different things. Of course, the underlying company's financial strength. They'll look at balance sheets, financial data, earnings, assets, liabilities, sales growth, all the different fundamental indicators that they feel are the reason why stock prices move up and down. They'll also look at industry strength and favor companies in industry leaders, not laggards. And they'll also look at the overall economy, and they'll look at interest rates, inflation. Those are the two enemies of earnings, and just a lot of other data. So they're studying constantly financial data as it comes in to, again, assess the intrinsic value of the company. That's very time consuming if you don't have any help, right? The next camp of investor is the technical analyst. Differs greatly from fundamental analysis because traders now are looking for attractive situations with price and volume. That's it. They feel that all those other factors or all that data, the fundamentals are already baked into price. No need to pay attention to it. I'm trying to look for historical patterns to help me identify buying opportunities moving forward. So they believe patterns repeat themselves. So they're looking for similar patterns or similar situations with price and volume to help predict what the stock is going to do moving forward. So they feel that price and volume really are the only two factors that are driving price. Well, the fundamental analyst disagrees. They see financial data and strength of company and economy and industry group as the reasons why. Now, if you get them both in a room, they will argue till they're blue in the face. Again, fundamental disagreement on what moves stock prices. I'm here to tell you that we can merge the two. They're both right. They're both right. Both have merits, depending on objectives. Okay? So I'm here to say that we can merge the two. VectorVest does a great job of it because we provide a ton of fundamental indicators. And it's very easy within the program to identify a fundamentally sound company from a fundamentally poor company. June 12th, just an example, McKesson Corp. You guys are all familiar with this company, I'm sure. June 12th, 2023 was just a snapshot of the values of our core proprietary indicators. Most of them are fundamental indicators. So Dr. DeLito wrote in an essay a long time ago, he said something like this. He said, good portfolio management starts with buying the best stocks. Good team building starts with getting the best players, right, if you're using the sports analogy. So no matter if we're investing or trading, we want to buy the best stocks. Our objective might be 3 years. Our objective might be 3 weeks. I want to be in the best stocks. So as of June 12, 2023, McKesson, it was priced right around $393. We think it's worth $538.43. So remember the goal of the fundamental analyst. He or she is looking to determine what the intrinsic value of the company is. We slap one on every stock every day. We put a value on every company. So all of that work that someone does to determine true intrinsic value, we do all that work for you. We take all that data, give you guys information. So 538 is the value. I like that. That's a good start, right? If I'm paying $393 for something that's worth $538, I'll take it all day. If I'm investing for the long term, I'm happy. Even if I'm trading, I'm happy. I'm buying an undervalued asset. Okay? The next two indicators here, RV and RS, they're fundamental indicators. So remember I talked about how a fundamental analyst will look at earnings and assets and liabilities and all of those different indicators. So do we. And we give you indicators here to help determine safety and upside potential. So relative value is an indicator of long-term upside potential. 1 to 3 years, is it likely to outperform a AAA corporate bond or not? If the indicator is above 1, the answer it is. It is by about 46%. So at 1.46, this stock has tremendous long-term price appreciation potential. Okay? Relative safety is an indicator of risk. It looks at consistency and predictability of financial performance. The stronger the earnings reports, the more consistent and predictable they are, the higher that RS number would go. And if it's above 1, it's good. So we have a fundamentally sound company. So McKesson Corp, if you've never heard of them before, By looking at the price to value comparison and relative value and relative safety, this is a fundamentally strong company. Our earnings per share is $27.45 a share. That's with a 25% earnings growth rate. Nice earnings yield at 7%. There's your other fundamental data. PE ratios, they pay a dividend as well, which is always a good sign for a company if they're able to pay a dividend. They're obviously turning a profit, so they're handing that over, some of that over, not all of it, some of it over to their shareholders, which is awesome. Fundamentally sound company. So what this is a snapshot of a fundamentally sound company. I want everybody to kind of understand what I just went through so that no matter which of the 9,000 stocks that you're looking at, we want to make sure these numbers kind of line up. Okay? So let's take it. Let's kind of go through a real life example or an example of a stock that you would invest in. Okay, so here's a chart of McKesson. Now, the hard right edge is not June 12th. It's in October of 2022. I'll explain why I went back. But we're looking at October of 2020 to October of 2022. How's earnings per share? Bottom left to upper right. Good. Relative value, is it above 1? Yes. And I'm not too concerned with the trend of the indicator with RV and RS. Yes, sure, it's sloping down. That's not too important here. Is it above 1 or below 1? Above 1 with RV, well above 1 with RS. Look at that earnings growth rate, right around 20% there. Again, hard right edge is October of 2022. So you're looking at the chart and you're looking at the fundamentals and you're saying, okay, great, fundamentals are there. I can move on from fundamental value analysis, right? I'm trying to now invest in this company. Is right now the time to buy it? That's the question. The fundamental analysis is done up front, and then once you determine if it's a fundamentally strong company, your next step is to determine a buying point, an entry point. And if this was the hard right edge, and I was investing in the stock, I wouldn't buy it yet. First off, it has a hold rating. Probably wait for it to get a buy rating before I would buy into it. Okay? Simple. If it's a long-term investment and it's got a hold rating, it simply means just that. Hold. Don't buy. If you own it, you're holding it. If you don't own it, you might want to wait for a buy rating before you buy it. Okay? Because the stock is channeling. It's moving sideways. Okay? If you're trading the stock, if you're saying, I'm not either a couple of things. You're not interested in buying it and holding it for the long term, but it's a fundamentally sound company, but you're just looking for a short-term trade. That's number one. Number two, what if this is a stock that you already own? Meaning it's in your retirement portfolio, right? You have skin in the game here. You've done the fundamental work. You've assessed the company's value, its safety, whether it's undervalued or overvalued. How's the upside potential? You feel it's a suitable stock for your retirement portfolio or your long-term portfolio. You have it in your portfolio. During this time period, there's no reason why you should have sold it because the stock price never went below our stop and we never got a sell. What's to say that you can't supplement those long-term gains with short-term gains? Right? So you have this stock in your portfolio. You will only sell it when it gets a sell rating. But you're looking at a situation right now where the stock has pulled back off of a new high. Okay? Pulled back off of a new high and has settled in to the $340 price zone. That zone just so happens to be support. Why is it support? Because it used to be resistance. Back in May and June of 2022, and even August had a little hard time there breaking above it before it did. And when it did, now we're seeing the retest of it. So, you got this stock in your long-term portfolio, performing well, pulling back a little bit, so you've given back a few, some of those gains. But now you see a situation where if this stock breaks out, if this stock retraces from that support level, one of the things I'm seeing here is as price is settling into support, you can see volume begin to dry up here. So that's a good sign too. Lower volume hanging out at support. You got indecision, you got a tug of war, but there's not a lot of volume. And what you wait for is you're looking for a breakout. You're not trading during this period. This is a quiet period. You don't trade during quiet periods. You wait for a breakout. And if I was trading this stock, if I was swing trading this stock, looking just for some short-term gains here, I would wait for price to move above that level there that you see, right above the recent high within that channel. Boom, you get it. Pretty good volume on that day as well. You got the big breakout. You got the close above the high. You got yourself a signal. Now, I know what you're saying. You're probably thinking, well, if I would have bought it the day before, it would have been that much better off. Sure, you could say that now. But, it's just an industry standard technique that you don't buy at support. It's not worth the risk. You wait for the retrace. At support, there's that battle, right? There's the selling pressure and buying pressure kind of coming to a head, and you want to see who wins, because price had been falling. I mean, it had been falling. Then it settled in, but you don't know if it's not gonna continue or not, right? That's a turning point there. You wait for the retracement. Okay, you wait for the retracement. Got the retracement. Got the pull away off of the support level, closing above the high. The stochastics oscillator, here's another indicator, another technical indicator that traders use to identify oversold and overbought situations. Okay? When the stochastics oscillator gets below 20, you're in an oversold situation and you're looking for an entry. That entry is when the stochastics oscillator goes from below 20 to above 20, which it did on the breakout day. So you had a retracement off of support with a bullish stochastics crossover on a fundamentally strong company that you may already own in your retirement portfolio. But now you're supplementing those gains and trying to make a quick buck here. So what I would look for, let's talk about managing the trade. Okay, support is my floor, meaning it's my initial stop. I'm not letting price go too far below that support level before I would take this trade off. And I clearly see resistance up there at about 370 and change, right? Clear resistance. So that's where I would look to take profits if I see any hesitation in that zone. You're not selling it from your retirement portfolio or your long-term portfolio. This is a swing trade, which you're now putting in your swing trading portfolio. Okay? I'm just fast forwarding one day because we needed follow through. We didn't take the trade on the breakout day. You don't trade the breakout day. You wait for confirmation and a close above your buy level, and then confirmation the next day, also known as follow through. Okay, and we got follow through there the very next day. Didn't happen early, but it did move a little bit higher there. Okay, now. You're probably thinking, all right, that was a good stock setup. That was a nice setup. But should I have bought it on that day? If you're a VectorVest subscriber, you know that what trumps individual stock setups is the overall market. So the market had to be doing something for us to even take that trade. It was a great setup, but I've seen great setups before in a bearish market environment that don't work out too well. So you want to make sure you have the market on your side. So here's October 4th. That was the day where the stock broke out, and the VVC had gotten crushed, right? VVC had gotten killed here. We were in a confirmed down situation. We're just coming off of a new low. The MTI got to below 0.6, and the buy to sell ratio got to below 0.2. We know when those indicators get to those levels, this type of rally is actionable, meaning it's okay to start buying stocks again. When you see a strong rally like this, when the MTI is below 0.6 and the buy to sell ratio is below 0.2, which they were prior to that big update. So good. We had the market on our side on that day. Give me a second here, guys. Oh, okay. We had a signal there on that day. So So here's a long-term stock of McKesson. This is basically June of 2022, just a couple of days ago. And I'm reiterating the point that I made earlier about why wouldn't this stock be in your long-term, capital appreciation, retirement portfolio, whatever you want to call it, just your hope to buy and hold as long as possible portfolio, right? Why wouldn't it be? We know the fundamentals are strong. During this 3-year time period, the stock price never went below its stop price. Never closed below the stop price, which would have given it a sell rating. There is no better exit criteria to use for long-term holdings than our sell rating. That means price has gone below the 13-week moving average, and you're out. Not once over this 3-year period did the price of McKesson Corp go below our stop price, never got a sell rating. You could have bought it and held it the entire time. So reiterating the point what I said earlier about how you can take a stock that's fundamentally strong, that might be in your retirement portfolio, and trade it and trade it and trade it and trade it and just keep supplementing returns. You know the price of the stock is going up, but what you're doing as a trader now is you're trying to find better buying points, pullbacks to old highs and retracements off of support and stochastics crossovers, right? You're not selling your long-term holding because you see a pullback to support, unless that pullback to support winds up coinciding with a sell rating. You're keeping it in your portfolio, but you've given back some of those long-term gains, and you want to kind of supercharge returns on this one stock by trying to find really nice short-term buying opportunities. So little quick test here from that October 4th date to a couple of weeks later. 8.5% gain, quick 8.5% gain in just a couple of weeks. That's 140% annualized. I'm not saying you're going to make 140% a year all the time, but it just puts in perspective the size of the gain in such a short period of time. Now, I said that I would have looked to take profits at resistance, right? Well, look what happened. Price hit resistance. What did I also say? I said I would look to take profits if I see hesitation at resistance. If you see hesitation at resistance, look to take at least half the trade off. No hesitation whatsoever at resistance. Price just continued to move up every single day after the breakout above resistance. Went up even a couple of days later. Now, I'm saying, all right, it seems to me that we're a little overbought right now, right? We're almost going parabolic. Yes, great. I love it. I'm not complaining about up day after 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 up day. I'm not complaining about it. I'm just preparing for some selling pressure here and some profit taking, right? You have to. The following day there, first down day, and I wouldn't even say that you should exit on that first down day. But that day formed what's called a one black crow. It's a bearish candlestick reversal signal. Got some pretty good volume on that day as well. I said it seems to me that we're overbought, but seeming to be overbought isn't really a thing. You use an indicator to tell you that, right? The indicator is the stochastics, by the way, I'm sorry, at the bottom is above 80. That's telling me that I'm overbought. That price is overbought. So you have a bearish candlestick formation in an overbought situation and follow through the very next day early, you're out of the trade. You're out of the trade. You're not selling your investment, right? You're not selling your long-term investment. You're just out of the trade that you bought there on October 4th. Now what you can continue to do here is look for another opportunity, right? It's pulling back. You made money. You look for another buying opportunity. What I would love is for it to stop right at this support level. It's support now, right? It used to be resistance. I would love for it to stop there and then move off of it to give me another buying opportunity. Well, it didn't. It did stop there. Big red candle here. Remember, this was our exit day. I know the stock went up a couple of days. I'm not concerned about that. But there, it did stop right here, beginning of November, but it did not pull away from it, right? It just completely crashed through it. But again, look at where it stopped the next level. So it broke through this support level, but it landed in the support level right below it. almost to the penny too on an intraday basis. Stock rallied, got a lot of buyers coming in at that 340 price. Remember, it's a good company. I'm not trading this type of strategy on a poor company, a fundamentally poor company. So there's the blending of the two. And then, of course, I mean, that's just kind of high level overview conceptually, but how do you actually do it? I'll show you guys how we do it in the program in a moment. But boy, that was a nice, and then you had a nice follow through the next day. Another opportunity there for some short-term gains. You get resistance there. You look to take it off, look to take the next trade off, and you just keep doing that. You just keep trying to identify favorable price situations, favorable levels at which you think that upside potential outweighs immediate downside risk, and that you can make a quick buck. That's what swing trading is all about. Okay. Let's take a look at another stock, just another quick example here. United Health Group, great company. It's darling of the industry, right? The healthcare industry. As of just a couple of days ago, $491 was the price. We think it's worth $543. Good. Undervalued. It's undervalued. How's the long-term upside price appreciation potential? Very good on a 0 to 2 scale. It's above 1.37. That's RV. Is it a risky investment or is it a safe investment? Look at that RS, 1.3. Now, right now, as of June 12th, the stock was falling in price, and it had a hold rating. So if this was a stock that you look at as an investment, I don't know if now's the time to buy it. Remember, for a long-term investment, you want to favor fundamentally sound companies, but really you want them in uptrends. And as of June 12, 2023, just a couple of days ago, it was not in an uptrend, and it had a hold rating. Fundamentals are strong across the board. They also pay a dividend, 18% earnings growth rate, nice earnings yield. Remember these values, right? This is how we determine fundamentally strong from fundamentally poor. So just going back a few months there, hard right edge of the chart is February of 2023, and the left side is August of 2020. That's a long chart there, right? Almost 2.5 years or so. Only once did the stock get a sell rating. Only once, just barely, and then we gave it a buy because it stopped falling, started going up, and you could have bought back in. So this is another stock that you could have had in your retirement portfolio for the last 3 years. Only given that sell once, and then it got a buy, and when we gave it a buy in May or June of 2022, never got a sell again, so it's still in your portfolio. Fundamentals are strong. We know that. So how could you, and this is a perfect stock, guys. This is one of the best support and resistance examples that I've ever seen. Because, really with fundamentally good companies and widely known companies and, actively traded companies, support and resistance works better than your little 90-cent stock or $2 stock that, is more speculative than anything else. But here, I got support and resistance obviously at the top. There's volume. There's the stochastics oscillator. So back here, this September, October, December, January, March, you had clear resistance, right in this 375 zone or so. 1 touch, 2 touches, 3 touches in that zone, little pullback, and then you finally got the nice breakout. There's when you take the trade. Okay, there's when you take the trade. Stock price runs considerably, pulls back a little bit. You take profits off. You hope that price falls back down to that support zone, because you're salivating if that happens. You, of course, don't just buy at the support level. You want to wait for a retracement off of it, and you got it. The stochastics oscillator, I like coupling stochastics with support and resistance. Stochastics oscillator went from below 20 to above 20. So you got a bullish stochastics crossover and a retracement off of support. You're buying in again. You have price fail to make a new high and then pull back down. You take your trade off. You could have even taken it off a little bit earlier here when the stochastics oscillator went from above 80 to below 80, right in this area here. Okay, stochastics goes all the way back down to 20. Had a little bit of an opportunity. But again, what you're hoping for again is when price pulls back, it comes back down towards support. This is why this is one of the better examples I've ever seen, because boy, it's doing it like clockwork. It's it's eventually coming back down to these levels. It might take a little while, but it eventually is. Now you got the breakout. That resistance level becomes support. And you hope that once price breaks out of resistance, it comes back down eventually to retest that zone. And it did. And the stochastics oscillator went from below 20 to above 20, and there's your next signal. What's happening now, though, is that your support and resistance zones have risen, right? Because what used to be resistance is now support, and now you can see that as price retraces from that support level, it's finding a higher resistance level. But it keeps coming back down and retesting old support, and it begins a new channel. And you're buying at the bottom of the channel, and you're selling at the top of the channel. You're buying at the bottom of the channel, stochastics goes from below 20 to above 20, price retraces from support, you're buying at the bottom of the channel. You're selling at the top of the channel when price retraces off of it. And then if it breaks through it, that's bullish. You can trade it again. Price breaking resistance is bullish. Here in this case, got another retest of that support zone. Okay, price breaks through resistance, and again, your support and resistance zones go up again. They rise again, and you're just playing those retracements off of those support levels back and forth, back and forth. Just think what that does to the overall gain of the position, right? Because you're making money on your investment, because the stock price just moves higher and higher and higher and higher month after month after month, and you're just you're banging away at short-term gains when you see really nice situations with price, volume, and some other technical indicators. Okay, so now how am I going to find trades, right? I'm understanding the concept. I know what I want to see in terms of the fundamental indicators. I know I want an undervalued stock. I know I want with RV above 1. I want RS above 1. I want strong earnings growth, GRT. You really like it to be greater than the sum of interest and inflation. Interest rates are about 5.25%, and inflation's about the same, maybe a little bit less. So we're looking at about maybe a 10 and 11% sum of interest and inflation right now. You want earnings growth. You want a company to be able to grow their earnings faster than the sum of interest and inflation to kind of stay afloat and stay profitable. Okay? So we know what we want to see there. We know just a few right now, and I only taught you 2, stochastics, support and resistance. There are so many different other technical indicators and technical approaches to identify shorter term trades, swing trades. Kind of kept it simple here today. But we know what we want. In this case, we want a stock that has just recently pulled back to support. Maybe the stochastics oscillator has gone from below 20 to above 20. But we want to merge the two. And we don't want to have to look at chart after chart after chart. So that's the one way. That's one way that you could find trades, is to look at graphs. You go through any list. You go to the stock viewer, you go to the S&P 500 watch list, and you just first off look at the fundamentals and only favor the stocks that are undervalued, with good RVs, good RSs, good earnings growth. Then you take those and you chart them to identify a favorable current price and or volume situation. Tedious, not a very efficient use of time, right? My preferred method is to use a scan, okay? And this is just an example, okay? This is just an example. I want you guys to understand the concept first so that you can take any scan, any VectorVest search in the program that finds fundamentally sound companies and apply technical analysis to it. So this is a search in the program that we have called Prudent Performers. It looks for stocks with an earnings growth rate greater than 15%, looks for a relative safety greater than or equal to 1.15, looks for relative value greater than or equal to 1.25. Okay, so we know that when I run that search standalone, Prudent Performers, I'm going to find very good companies. The search is sorted by VST. What I did was I added a one-line parameter. I said I want the stochastics to have crossed above 20 in the past day. Stochastics has crossed below 20 in the past day. So as an example, just a few days ago, June 2nd, here's one of the stocks that came up on the search. Churchill Downs, great company, good looking overall chart pattern, has recently pulled back off of a new high and stopped at an old high. Stopped at an old high, creating that support level, and you could see the retracement off of it. The stochastics oscillator, which is in the search actually, support wasn't in the search. It just so happens to be this price fell right and landed right in that support level. You can add that to the search as well. But what a setup. Here's another one, FI, another great setup. One of the top stocks from the search results on that day, June 2nd. And let me show you real quick. Just going to take the date here in our units. This is the program now. This is not slide. I'm not in slides anymore. And if I go to that search, and run it on June 2nd, there are the first couple of stocks, Churchill Downs and FI. They were the top stocks because the sort is VST descending. The first two stocks there, right at the very top, were two unbelievably perfect setups. Just pulling off of a new high, landing right at an old high, right in this support zone. And you see those long lower wicks, guys? This is candlestick analysis. Long lower wicks at support with an oversold stochastics is a potential reversal signal. Okay, you wanted that, you needed that follow through there to kind of to cement the signal and give you a follow through, and you got it, and you could see price continue to move higher from there. Great setup. Here's another one, GPK. How far down the list was this? But I look at this, not too far, just about 6 down. I look at this and I said, oh my goodness, this is just fantastic. Bottom left to upper right, resistance, 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 resistance. Breakout above resistance, retest, breakout above, retest, breakout above, retest again. So June 2nd is when I ran the search, and this was the what came up. This was just a perfect setup. And look at what price has done after that. Nice retracement. By the way, that's a bullish harami. That is a bullish candlestick reversal signal at support, oversold stochastics. You can't get a better setup than that. You really can't. So just an absolutely fantastic setup. So if I were to go into the program now and run that, let's see if we can find some candidates today. Same search. I'm just going to click on stream here. Current date and time, run the search. No results. All right. No results. Why aren't there any results? Well, I'm suspecting that because the market is on a tear lately, there aren't that many stocks that meet all of this criteria here, and also the stochastics has just gone from below 20 to above 20. So let me back up a couple of days. Let's just see. Let's go back to the 13th. Okay. Let's take a look at these 4. Okay. There's the 13th. Hard right edge is the 13th. We know, I'm going to pull this over for a second. First off, when you use a scan and the scan is looking for the values of these very important fundamental indicators to be above a certain level, you don't really have to go through the spreadsheet, right? Because you already know if the stock is in the list, it meets that criteria. But just kind of confirming, hey, yeah, we got an undervalued stock, a little bit overvalued, a little bit undervalued, quite a bit overvalued. But all of them have good RVs, all of them have good RSs. All of their earnings growth rates exceed current interest and the sum of interest and inflation. Okay, so fundamentally very good companies. Let's see if there are any setups. June 13th. Okay, so I'm sorry, what did I say? Yeah, June 13th. Hard right edge, June 13th. I'll bring it to current. It doesn't matter. So are we seeing, what did this looks like what? This looks like, what was that first stock I showed you? McKesson, right? Where the stock had recently pulled back off of a new high. It created resistance, and then it just kind of capitulated there for a little bit. If I put support and resistance on, look at where the stock price is right now. Beautiful setup. Now, this is the hard right edge, guys. It's June 15th. I'm saying it's a beautiful setup. I don't have a signal to buy yet. I don't have that clear retracement off of support. But boy, does this look like a good setup, though, right? Okay. Looks like a really good setup. I'm just going to wait for a breakout above support. Look at that. First stock in the list. Let's look at the next stock. Okay, no, for obvious reasons. I know it meets the criteria. The stochastics crossed above 20. Must be a buy. I don't even know where we still have this stock in the database. But no, this is not a viable candidate. Here's TTC. So it just recently broke down below support. Let me go take off the RSI too. Doesn't have anything to do with the technique. The price of the stock is below its 200-day moving average currently. I don't like that. By the way, if I put on RE, look at this. Look at where price is, right at the 200-day moving average. Right at that 200-day moving average. Beautiful setup. Can't say it enough. Here with TTC, that was the third stock in the list. Only 4 stocks in the list total, but this one is below the 200-day moving average. I mean, it's in too strong of a downtrend here for too long. I'm not looking to play a potential rally here. I would pass on that one. And here's MELI. I like it. I'm seeing a setup. I don't have a trade yet. Okay, stochastics just crossed from below 20 to above 20, but I'm seeing price settle in now nicely to this $1,198 very high dollar stock. I'd buy the call more so than buy the stock, but I would need to see a nice breakout above or off of this support level for me to take the trade. But it's a good setup. I'd put this one in a watch list. So this is obviously a much faster, time-efficient process to use a scan. Now, to be able to do this, you do need our Pro Trader module. It is an add-on module. I'll talk about how to get it in a moment. But to add a technical scan, a technical indicator to a fundamental scan, you do need the Pro Trader module to do that. Okay? A lot of questions are coming in about how do I get it? How do I do this? I've never thought about combining the two in this way. So you have a choice. You can do nothing. We hope you don't do that. You can do it alone, maybe take bits and pieces of what I taught you today, or just let us show you how. Okay, and that's why I always like to give answers. I'm a former high school English teacher, pretty liberal in terms of grading back then, but I just like to give you the answers. So that's why we put together this 6-week course. It's called Uncovering Trends. It's a technical analysis course, but we combine what we talked about today with every indicator and every trade technique that we teach in this course. You get the complete Uncovering Trends program. You get the 6 training modules. The modules are pre-recorded, and they were just recorded in February of last year, which is, by the way, the first time we ever did this course. This is one of our newer educational courses. But they are 6 pre-recorded modules. A couple of bonuses. We are going to meet live for our class. So this class, we will meet live 6 times. I'm sorry, 7 times. It's actually 7 mastery support sessions. We had to break up one of the modules because it was so many lessons, so many indicators. We had to break up module number 4. We're going to meet live 7 times to cover the contents of the modules. You'll also get private dedicated email support as well. Another bonus, we're going to give you access to for 70 days to VectorVest Premium. This includes the Pro Trader technical searches. Okay, this gives us the ability to add any technical indicator that we track to a fundamental search, just to make sure that we're trading we're trading only the best stocks, and we're really identifying favorable buying opportunities. Okay, so here are the 6 modules. Okay, question is, what will be the duration of each session, please? Sure. So here are the modules. There are 6 pre-recorded modules. The times here vary. These are pre-recorded, so for anywhere from an hour to 2 hours. Module number 4 is a beast. It's got 16 different lessons. By the way, there are 6 modules and over 60 lessons, little mini lessons within each module. So we broke it down as opposed to just one long video for each module. So really nice structure there. Module number 1, we talk more about how we blend fundamental and valuation with technical analysis. We talk about the importance of market direction. Module 2, the importance of price structure and volume analysis, the different ways to view price. We'll discuss trending markets, neutral markets, extreme markets, and the importance of volume. My favorite module, I think, because I love candlestick analysis, and I do this entire module myself, an introduction to candlestick trading. By the way, myself, Ron Wheeler, who you know from our Ultimate Retirement Solution coaching group, and a lot of our option courses, will be your other instructor, David Paul and Stan Heller as well. So you got a great cast of instructors here for this course. I teach module number 3, bullish and bearish candlestick patterns, and we combine them with a few different technical indicators. Module number 4, we're all involved with module number 4 because this one's a beast. We teach 16 different indicators, I believe. There are 16, I think, different lessons in this module. Moving averages, MACD, Bollinger Bands, RSI, stochastics, envelopes, on-balance volume, momentum, just a lot of great indicators, and a couple of different trading techniques, trading systems in this module as well. Fibonacci retracements, bullish and bearish divergences are all taught in that module. Module number 5, trade management and psychology. You know, it's more than just identifying setups. We have to manage ourselves along the way. So we talk about the importance of having a trading plan, risk management strategies, something that's overlooked, position sizing, diversification, and asset management. All that's covered in Module 5. And then again, blending fundamental valuation with technical analysis. So you get the complete course, access to it for a year, okay? Mastery package, which again is 7 live mastery support sessions, 6 modules, over 60 lessons. We're going to give you 70 days access to VectorVest Premium, which includes those Pro Trader technical searches. And of course, 1 year access to the course. Now the course is valued, all of that is $19.90. The early bird rate is available for $14.95. But I want to thank you guys for being here today. I'm going to knock an extra $600 off there. So for $8.95, and this rate will only be available for a short period of time. I'm going to put the address that you see down there at the bottom, vectorvest.com/trend. So you can just click on it. You don't have to type. $8.95. 6 pre-recorded modules, probably 10 to 12 hours of instruction, 60 plus lessons. We're going to do 7 live mastery support sessions. I'll get to those dates in a moment. 70 days access to VectorVest Premium, again, if you don't already have it. Now, this is 100% money back guaranteed. If after the course is over, if you've done all the work, at least watch the recordings and we know if you do or not. You say, no, I'm still not satisfied, we'll gladly give you a refund, okay? Now, a couple of questions are coming in. What if I miss a session? When are the sessions? Here are the dates for the live mastery support sessions. These dates will be in an email as well once you guys register for the course, okay? By the way, when you register and you go into the university and you go to the course outline, you'll not only see the modules and the lessons, but you'll see the mastery sessions there as well that we did 4 months ago. Those mastery sessions will be replaced by the ones that we do in our class this time around. The modules won't be replaced, or the core lessons won't be replaced, just the live mastery support sessions. So again, there are 7 of them, 7 sessions, because mastery session number 4, we had to break up into 2 parts. And that was a suggestion from some students of that February class, because there's so many different indicators in module 4. It was just so hard to cover them all in one module, in one mastery session. So we broke it up. Okay. All of these sessions start at 1 p.m. Eastern time. Okay. Interesting, Michael. Michael says, an advanced, the successful investor, it looks like. That's an interesting take on that. We talk about fundamentals, and we pay more attention to fundamental analysis in this course, more so than, let's say, some of our other swing trading courses. But don't get me wrong, it's a technical analysis course. But you do see the nuance of adding fundamental analysis to a lot of what we do here. Okay? All right, guys, VectorVest.com/trends. I'm going to stick around for a few more minutes, answer any questions that you guys have. Oh, yeah, the slides. Thank you for reminding me. In the handout section, in a moment, you're going to see a PDF. It's going to say uncovering trends. It's going to say a date of February there. Just disregard that date. But it's a PDF. You guys should see it there. So Michael's asked another good question. Michael says, is this for swing trading, or can it be used for retirement stock selection? It absolutely can be used for retirement stock selection. So you got a stock in mind, a retirement stock. Of course, it's the fundamental analysis that is going to determine whether you buy it or not. But if you're trying to maximize returns and you don't want to buy at a new 52-week high when the stock has gone parabolic, you're waiting for a better opportunity. Here's where this comes in. Okay, you're waiting for a pullback, a better buying zone in a potential long-term investment. Absolutely. Okay. Steven's asking, what's the course cost for premium subscribers? For elite members, it's actually $8.95. The regular rate is $19.90. The normal or the regular elite price would be half that, which is $9.95. This rate, very special rate, offered only for a limited period of time, just a few days, is actually less than the elite rate. So if you wait a couple of days, you might have to pay the $9.95. It's still less than the early bird rate of $14.95, which if you're not an elite subscriber, that's what you'd wind up paying here in a couple of days. If you already paid for Pro Trader, there's no other discount. It's part of your subscription, so no other discount there. Steven says, Jerry, I know it is recorded. For those of us that still have to work, do you know what time of this live sessions will start? Okay, I covered that, Steven. And the duration, in case we are able to break away and attend live. Sessions start at 1 p.m. Eastern time every session, and they are anywhere between an hour to 2 hours. And they are recorded, and then they'll be uploaded likely that night. Okay. And today's session is being recorded as well, guys. So you will get a recording of today's session a little bit later on. Excuse me. All right. Any other questions, guys, before we break? My email address is jerryd, Jerry, D as in David, at VectorVest.com. If you have any questions about anything that I discussed today, or any questions about the course, just shoot me an email. Feel free to shoot me an email. You'll have all of our email addresses, by the way. They're all in the slides in the course outline. Mine, Ron Wheeler's, Stan Heller's, and David Paul's. So any questions throughout the course, feel free to shoot us an email. All right. All right, guys. Have a great rest of your day. It's Thursday, so one more day before the weekend. Enjoy your weekend, everybody. Have a great day.